Are you financially ready for your golden years? You've already made stock investments, but you've also heard about Bitcoin, and you wonder if you are missing out by not investing in it too. So, which investment opportunity is the better one? Here's a glance at the difference between investing in cryptocurrencies versus stock. But first, hello and welcome back to the channel. This is Financial and Investment Wisdom, and we're back with another incredible video. Here, we talk about the world of cryptocurrency, finance matters, and investments. So please subscribe to the channel and enable alerts to be notified of each new upload. While both cryptocurrency and stock are types of investments, each has its own set of features that distinguish it from others. For example, when you buy a stock, you directly invest in a company that you believe will bring growth. On the other hand, you buy tokens of a specific cryptocurrency to either use them as a digital investment portal or trade them as payment. Firstly, we will tell you all the differences between cryptocurrency and stocks, so it will be easy to decide which one is the best. Without further ado, here are some differences. Number 1. Life expectancy. Perhaps the most obvious difference between stock and cryptocurrency is how long they have been around. Some experts trace the birth of stock markets to the 1300s, when Venetian lending institutions began to trade and issued loans backed by securities issued by foreign governments. On the other hand, cryptocurrency is much newer, having started with Bitcoin in 2009. Number 2. Ownership status. Stock and cryptocurrency are two different types of investments. When someone buys a stock on the stock market, they are investing in its future growth while also owning a share of it. Although governance tokens give holders a vote in the company's evolution, owning a cryptocurrency coin or token does not mean that you own a company's share. Number 3. Utility. Holding stock means you own a share of the company and can be part of its assets and profits based on how much stock you hold. However, holding coins and tokens does not entitle you to share the issuing company's cryptocurrency revenues. Instead, investors purchase a coin or token for various reasons, such as a payment method or to store funds. Number 4. Method of trade. Stocks are handled on stock exchanges or stock markets that are highly regulated. These traditional markets do not accept cryptocurrency. Instead, investors buy and sell crypto on a cryptocurrency exchange, then store the coins and tokens in a digital wallet. Cryptocurrency cannot be purchased on a stock exchange, and stock cannot be purchased on a crypto exchange. Stock exchanges and stock markets have set business hours. On the other hand, crypto markets are open 24 hours a day, 365 days a year. This allows investors from all around the world to enter and exit the market at any time. Number 5. Time horizon. Your time horizon is a key criterion when you need money from an investment. The safer your asset is, the more likely it is to be available when you need it. Conversely, the more volatile an asset, the less suited for those with a short timeline. Generally, most experts suggest that investors in risky assets such as stock need at least 3 years to ride out the volatility. So now we'll talk about the stock market. Stock are exposed to volatility, although are better than, say, crypto. Individual stock are more volatile than diversified stock, which benefit from diversification. Stock are better suited to those who don't need to access their money and leave it alone. In general, the longer you can leave it invested, the better. Some stock have a higher level of volatility than others. Growth stock, for example, are substantially more volatile than value or dividend stock. As a result, investors may shift from more aggressive stocks, that is, growth stocks, to safer ones, which are dividend stocks, as they need to tap their money, such as when they approach retirement. So let's talk about the cryptocurrency market. As we know, stocks are volatile, hence cryptocurrency is ridiculously volatile. For example, Bitcoin lost more than half of its value in a few months in 2021, only to gain 100% later. Crypto is unsuitable for short-term investors because of its high volatility. Moreover, crypto is better suited to traders who can leave their money tied up and wait for it to recover. Think years rather than weeks. Good day, mate! We've made it halfway through our list, and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. What do you think of the differences on the list so far? Let us know your opinion in the comments below. Let's move forward with the video. Number 6. Cryptocurrency maker and stock distributor. The autonomous and decentralized nature of cryptocurrencies is one of the reasons for their enduring popularity. Anyone can become a miner and try to get their hands on Bitcoin because of its leniency. Furthermore, other cryptocurrencies, such as Dogecoin, were created by bored programmers who wished to spoof the meme. It is completely different from the stock market. First, stocks need to be created. Then, they have to be cleared by government agencies and should also be audited. Number 7. Stocks are encrypted from hacks while cryptos are not. As we already told you, the stock market is widely regulated by government agencies and goes through complete yearly auditing. Due to its heavy scrutiny, there is little chance that stocks could be rigged or fraudulent. On the other hand, it is completely different for cryptocurrencies. Because of their decentralized nature, digital currencies are unregulated and prone to fraud. That's why a simple cryptocurrency scam could make you lose all your digital assets. Number 8. Transaction fees. Again, this is an important point to consider when looking at the stock or cryptocurrency market as to which one is the best investment option. A transaction fee is a cost that a company must pay every time a customer's payment is completed. The transaction cost varies based on the service provider. Certain areas will require fees when you are involved in the stock market. You must pay the fees somehow, even if it is a small amount. Furthermore, in the case of large investments, the government will tax both the investment capital and the profit simultaneously. You can be confident that the fees will be kept to an absolute minimum when it comes to crypto trading. This is because transaction gas fees are quite low in the crypto exchange market. Number 9. Legal rights. As already said, buying a stock is buying a share of the company, and as a result, the investor is usually given special legal rights over the investment. Such legal rights do not exist in the case of cryptocurrency. If you purchase Ethereum, ETH, on Coinbase, for example, and the Coinbase exchange is hacked, Ethereum is not liable for refunding your lost ETH. The current status of the crypto business is significantly riskier than regular stock markets, with few legal safeguards. Stocks are seen as a right of ownership, like voting and citizenship cards. Stock ownership doesn't change until the owner decides to sell the stock. When you invest in stocks, you are allocated a percentage of ownership in the company. In the digital crypto market, you are allocated tokens like Ethereum, Bitcoin, etc. when you invest in it. However, they do not represent a legal stake in the organization that issued them. Number 10. Portfolio management. If you are thinking about constructing your portfolio, you don't have to choose between cryptocurrency and stocks, or other kinds of assets, such as bonds or funds either. Instead, it's all about weighing your portfolio in a way that fits your risk and time horizon. Cryptocurrency works best with a small percentage of your overall portfolio, given its inherent risks. Consider a percentage of less than 5%. Even a small investment might make a big difference in your portfolio if cryptocurrency takes off. Limiting your allocation to a minimal amount also protects you from a full loss if crypto does not take off. If crypto becomes a significant portion of your portfolio, you can reallocate more of your funds to stocks to reduce the overall risk of your portfolio. So, what about stocks? A diversified collection of stocks should make up most of your portfolio, especially if you have years until you need to use it, given stocks longer than track. If you're investing in individual stocks, you'll need to do a lot of research to get a high return. On the other hand, if you are investing in funds, you can buy a broadly diversified fund like an S&P 500 index fund without doing any research and reap the benefits of high returns. So guys, now you understand all the significant differences between the stock and cryptocurrency markets. So it's time to decide which one is best for investment. Cryptocurrency versus stock market. Which one is better? Diversification is the key to successful portfolio asset management. It's never a good idea to invest all of your money in a single stock or cryptocurrency. As a result, there is room for both in the cryptocurrency versus stock market discussion. The developments in blockchain technology and the speed of Bitcoin acceptance must not be ignored. Cryptocurrency should be included in everyone's asset allocation strategy before 2025. On the other hand, stock markets are an excellent alternative for safe, steady development that comes with the regulatory security that crypto does not have. Spreading risk is an excellent investment approach for achieving a good balance of risk, security, and return. Cryptocurrency provides consistent returns too that may be higher than traditional stocks. On the other hand, stocks must not be completely abandoned because they still have a lot of value in a portfolio. Cryptocurrency's value has skyrocketed, but investors should understand what they're getting into before jumping in. Consider how crypto suits your risk tolerance and financial needs if you decide to invest. We have given you some wonderful differences to help you in your path towards financial independence What do you think? Did you enjoy finding out about these differences? Which ones do you think will be more effective for you? Cryptocurrency or stocks? Let us know in the comments below. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is Financial and Investment Wisdom, and we'll see you in our next video.